You're in the court. You can't handle the truth.
You have been convicted by a jury after a trial of one offence.
Your Honour, my client built his home by the law. Does he have the protection of the law?
Is that true or not?
I object.
Nothing further, Your Honour.
Silence in the court!
Hi, I'm Anna Svenson, Director and Principal Clerk of Svenson Barristers. Today on our episode, I'm joined by Whitten KC, a commercial law silk who specialises in insurance litigation. The LA fires of January this year demonstrate a worst-case scenario, a catastrophic mismatch between lack of insurance and widespread damage, causing billions in uncoverable loss. Closer to home, the March 2025 Cyclone Alfred demonstrated that natural disasters are having huge impacts on the economics of insurance in Australia. Will Australians living in high-risk areas be able to get cover? What interventions might come to ensure that insurance is available and accessible to all Australians? What measures are being put into place into Australia to ensure that the LA fire example doesn't happen here? Let's unpack the how, the what and the why to talk about how extreme weather insurance in Australia needs to play out in the coming years. Let's come together and have a brief chat. Michael, thank you so much for joining me today. Before we jump in and talk about all the ins and outs of insurance litigation, can you tell me a little bit about your practice as a barrister and your expertise in insurance?
Sure. Well, first of all, thanks for having me. Next year marks my 40th year in legal practice. And over that journey, I've been employed in or practiced in just about every conceivable facet of the profession. And in the last 25 years or so in Victoria, I developed a specialty in large-scale litigation, particularly building construction cases. And invariably, most of those cases would have an insurance facet to it, whether it be advice or issues or disputes associated with the large-scale litigation. More recently, I was able to be involved in two very large pieces of litigation in Western Australia and South Australia involving bushfires and recovery actions involving multiple group proceedings, where I, with a team of lawyers, was acting for 5 of the biggest insurers in Australia. That probably gives me a fresh insight into some insurance law issues, particularly given that our sub-theme is natural disasters.
Yeah, you absolutely have the credentials to talk to me about this topic today. So we might start with the LA fires, because I think that really sets an example of the worst case scenario for an insurance outcome. This occurred, obviously, earlier this year, 2025, in January. Over 17,000 homes and structures were lost, 55,000 acres burnt. The average insurance loss per structure, the stats are saying, is $1.9 million. So huge infrastructure loss. The total property loss they're estimating to be in excess of $100 billion. So I think that just really sets the scene. Of that, though, a huge portion is uninsured loss. Why does this represent such a crisis in your opinion, and how did we get here?
In terms of a crisis, it's multidimensional because it was the first in recorded history in which wildfires had penetrated so far into built-up areas.
Right.
And historically, of course, in California, where they have regular bushfire or wildfire seasons there, they've been largely contained to, as the name suggests, the wild, parks and forests and things like that. So that was the first wake-up call in terms of how wildfires, in Australia, bushfires, could be dangerous, not just to the environment, but to humans and all their property. The question on how we got there, or they got there, and how we are having to learn from that terrible ordeal can probably also be framed this way: the anatomy of a catastrophe. And you map that through. You start with before, during and after the incident. And using the LA bushfires as an example, historically in that insurance market, insurers had always been able to reserve in accordance with their various forecasts and modelling for wildfire risks in that state. None of that modelling predicted the extent and penetration of this particular wildfires and how much damage it was going to cause and how difficult it was going to be to control. The flip side to that is that whilst prior to the bushfires there was a fairly high level of insurance coverage, a number of the main suppliers in that market started to either curtail or cancel or withdraw their products from that market literally months before the wildfires hit in January this year.
Why do you think that was?
Because globally, the impacts of natural disasters and payouts associated with them has been growing. Certainly over the last 5 years, there's been a fairly significant trend upwards. But realistically, over the past 2 decades, there has been an undeniable increase in the impacts of natural disasters around the world in their various forms, and they're normally threefold. You've got water, wind, or fire.
True. There are big players when it turns
Correct.
to natural disaster.
And so invariably, you get a tension between the insurer's need to cover cost and make a profit. And of course, the lever for that is increasing premiums.
Right.
And the ability of a consumer, policyholders, to keep up with those premium increases. But there's also another facet to it, and that is that even where that balance can be struck or continue to be struck, when there is a disaster, the costs to insurers of reconstruction, clean-up, compensation, etc., have gone up exponentially.
To the building cost.
Building costs.
Right.
Mainly because there is normally a huge spike or skyrocketing of prices for both labour and materials when there are pressures on supply chains. Bottom line, it's just simply not profitable. The risks are too great and too expensive for what can be generated in terms of premium revenues. Now, that incident and the domestic insurance impacts had a reverberation around the global insurance market, particularly the reinsurance sector. So much so that pressures on reinsurance costs now are expected to be felt right around the world, including Australia, notwithstanding the fact that as at the end of last year, reinsurers globally are estimated to retain capital reserves of approximately $750 billion US.
Wow.
By which traditionally they're able to maintain a soft market, meaning a cap on premium rises, no great spikes, and also fairly expansive cover and accommodating terms.
On this concept of reinsurance, could you tell us a little bit more about what that means? What's the bigger picture of how reinsurance works?
In simple terms, reinsurance is where insurers basically buy insurance policies themselves from reinsurers to try and minimise the risk that they're primarily covering.
Is that about moving the risk,
Yes,
shuffling the risk down the line?
The power of global reinsurance is that you can spread the risk.
Right.
So where you get hotspots from time to time, major, whether it's catastrophes, man-made disasters, wherever there are concentrated and high-value calls on insurance in a particular location or demographic, the ability to then share the impacts of the payouts for that particular incident through reinsurance enables all insurers to try and maintain a smooth curve, if you like, in terms of their premiums. Otherwise, if you just had an insurer as a standalone entity who effectively cops an enormous claim set for a given incident, then invariably the premiums are going to skyrocket in that market for that insurer and those consumers. That softening is achieved through sharing risk through reinsurance around the globe.
And so as those individual companies we were talking about there, the Chubbs and the State Farms, were coming out of LA in those months leading up to what we now know were to be devastating fires, was reinsurance at play in the background?
Invariably. And so to the primary insurers, reinsurance is a cost. It's part of their ledger, their equation. What's it going to cost to provide this cover and what are we going to get for it in return? And on balance, the cost of reinsurance, which have crept up modestly in the last 5 years or so, but are starting to increase now as a harder market conditions start to bite, meaning the inability to keep premiums down,
right,
and also tighter policy terms. Then invariably those insurers in the California market that have since withdrawn have no doubt felt the bite of greater reinsurance costs. The costs of reconstruction, as you said, the average loss per structure is $1.9 million US.
Which is a lot. That's a lot. But I suppose it is LA. You're going to have a lot of mansions up in those hills.
Yeah, the Pacific Palisades, for example, and around Bel Air and Beverly Hills, but certainly Pacific Palisades are probably demographically one of the most affluent areas.
Yeah, it's
of that
Hollywood
region.
Hollywood on fire at that point.
Correct. And most of those homes owned by wealthy owners would have been fully insured. So your $1.9 million is just an average.
Yeah.
Losses were well in excess of $10 million for some of the bigger mansions. The combined effect of all those hits, if you like, obviously meant to those insurers it was not commercially viable anymore to stay in the market. What happens then? What happens to those people who can't get insurance?
What did happen? I mean, not everyone in LA is living in those mansions in the hills.
Precisely. For some time, California has had a government subsidised, if you like, or run insurance scheme. It's known as the Fair Access to Insurance Requirements, or the FAIR plan, and it's designed as an insurer of last resort for those consumers, citizens of California, who have not been able to secure insurance through private providers. The government scheme was available. However, it's very, very limited in terms of its coverage, maximum value cover, and anything beyond that in terms of top-up cover was extremely expensive to procure. So it has its limits.
So you could have partial insurance that might be government-backed, but ultimately it's still going to cost you a lot to get to the level of coverage required.
So that's one of the aspects of the current dilemma, underinsurance and uninsurance.
Yeah.
With underinsurance, the LA bushfires resulted in an enormous number of claims on the FAIR plan and reduced so the government's reserves by about $1 billion.
Wow.
Some of the recent reports are they've only got about $300 million left, which is regarded by most commentators as thin. So who knows how that's going to continue to survive over time. It's funded by assessments, as they call it, on the private insurers. Mm-hmm. So whilst the private insurers aren't prepared for some risks to offer insurance directly, they indirectly contribute to the funding of the FAIR plan so that at least some insurance is available to those who can't otherwise get it. Now, that's there.
Yeah.
What about here?
Let's bring it back home. Let's talk about some Australian examples. So I think it was only 2 months later, it was March 2025, that what we now know as ex-tropical cyclone Alfred hit. This was the most significant tropical cyclone since Cyclone Tracy in 1974. So it is significant in its strength. It is said to have affected in excess of 250,000 homes and businesses, and losses are estimated to be in excess of $1.2 billion, with over, I think where it's standing at 100,000 claims lodged. Can you talk to me about, I suppose, the perfect storm that was sitting, waiting for this cyclone to come?
Yes, well, as I said a moment ago about the LA fires, the reverberations around the globe from that size of catastrophe and the financial consequences. We had a taste here with the Lismore flooding in 2022.
Absolutely, and the same area that
Correct.
was hit with this cyclone.
That was the costliest insured event in history, in Australia's history. There's about $6.4 billion in insured losses, and it's reported to have been the second most costly insurance event in the world for that year. Now, in that same year, the Australian government created what's known colloquially as the Cyclone Reinsurance Pool. So the Cyclone Reinsurance Pool is designed to provide reinsurance, that is, to the primary insurers through a government guarantee, which at the moment has about $10 billion in reserves supporting it. And the principal idea is to try and assist insurers to keep their premiums down by having cheaper access to reinsurance through this scheme.
Is that like creating a domestic market reinsurance policy?
Correct, exactly. So it's not the same as a FAIR plan in California, which was primary insurance being provided through a government subsidised or endorsed agency. But here in Australia, the idea was, well, if the insurers can access cheaper reinsurance because there's not a profit element in the government scheme, then that should help them to keep their premiums down here domestically.
And maybe they won't leave the market.
Maybe they won't leave the market,
which
exactly.
is what LA had as a huge problem.
The ACCC has been, one of its mandates is to monitor premiums since the Cyclone Reinsurance Pool. And I should add that the cyclone cover extends to any other flood-related cover, but only if it's been produced by a cyclone. So not just normal deluge that might make a river or a creek flood through a town. But the most recent reports from the ACCC are that it seems that it is working. That is the primary intention of keeping premiums controlled. You can't say level, the same, static or even down, but certainly controlled. There's also discounts available where consumers put in place cyclone mitigation measures. That again is sort of the flip side to how to maintain control over the price of That is the affordability of insurance.
Insurance really has increased in cost in areas like Lismore, hasn't it?
Yes, exactly. The affordability of insurance right around Australia, but particularly in disaster-prone areas, has exponentially increased.
Would we call that a high-risk area?
Absolutely.
Yeah.
Well, it's certainly demonstrated by the 2022 floods and ex-Cyclone Alfred, as it became known, as also impacted there as well. To give you an idea about how much strain there is on the affordability for home insurance, particularly in disaster-prone areas, it's estimated that 15% of Australia's population is under what is called premium stress, if you like. And that's defined as the premiums for your policy costing more than 4 weeks of a gross domestic household income.
And that's a lot.
Per year, exactly.
On something that it's a gamble, really.
Yes.
You're assessing risk and thinking, well, is that risk going to come for me?
The worst that was polled was 7.1 weeks.
Wow.
And there are some areas in northern Queensland, Northern Territory and northern Western Australia, as well as some central New South Wales areas, where premiums over the last 3 or 4 years have increased by 400%. So that's the outer limit of how bad it is in terms of strain on affordability.
You can understand when it gets to that point why there would be some consumers who say, it's actually not affordable for me to do that anymore. I'm just not going to insure.
Yes. It's one of the psychological problems with insurance is that it's a contingent asset.
Yeah.
People think it won't happen to them
Yeah.
until it does. Or they see enough news reports about it happening around them. But by that time, of course, combined with other cost of living pressures that we hear about so often, insurance now has coming to the fore as one of the real ingredients of that sort of strain. It never used to be.
Yeah.
So certainly in the last few generations, since certainly the Great Depression and the post-war, Second World War housing boom, immigration, insurance was not an issue.
Was it
when
a bit
came
of
to
a given?
household affordability.
You could just go and get insurance.
Exactly.
It would be reasonable.
More often than not, the same bank that was providing a very affordable mortgage would just bundle in the cost of home insurance.
True.
In the last, certainly this century, that's all changed.
One thing you mentioned through the discussion of Lismore that I just wanted to touch on was the origin of the source of damage. So in this example, I was reading about damage occurring from water. To a customer whose house is inundated with water, I'm not sure they care at that point whether the water has come from the ceiling or from the floor. But there was a significant distinction in a lot of the policies to do with storm damage versus flood damage. And the cost of flood insurance was exponentially higher than it was for storm damage insurance. In one of the reports that we're going to talk about soon, Allianz gave statistics that said that 90% of their customers in that area did not have flood insurance, despite it being the most problematic postcode in Australia for flood. What are your thoughts on that problem?
Well, one of the examples of the differential between cover for stormwater, which, as the name suggests, more often than not, gutters on roofs are blocked or get overflowed and there's water coming down through into the house that way, or it could just be runoff from streets and things like that. But invariably, the definitions in most standard policies differentiate between stormwater and flood, flood being the occurrence where there are the natural water levels in a waterway, rivers, creeks, streams, etc., breach their banks and then start to flood into people's places. And for reasons which are not entirely clear, the differential in terms of premiums to include cover for flood was as much as $15,000 a policy per year. In other words, just not affordable at all.
That's huge. Yeah, huge money.
That's the obvious answer to why so few in these flood-prone areas were actually covered for flooding. Insurers will necessarily continue to increase premiums whilst the costs of providing the indemnity and the cover continue to rise. So you can see that there are a number of integers to the equation. As the frequency and intensity of natural disasters continues to rise, the costs of dealing with them will rise. Who's going to pay?
Yeah.
And unfortunately, at the moment, consumers are the ones primarily in the gun. The government, at least the last government, the current government, have been aware of those pressures and have put in place and continue to endeavour to put in place measures to try and alleviate some of that strain. But it's an imperfect approach to something that is so unpredictable. There are many who say, look, we must know now that the trend is upwards in terms of natural disasters, whatever you want to think about the climate science, which I think is the wrong question. The right one is what's actually happening.
Right.
And statistically, the number of natural disasters in Australia over the last 10 to 20 years is proof positive that they're on the rise, both in terms of frequency and intensity and therefore damage caused. There's no doubt about that. Why? Well, you can debate it. It doesn't matter. From a policy standpoint and for the everyday person, the question is, what are we going to do about it? How can I have some protection? How can I share this risk? But how much is it going to cost me?
And it's the practicality that comes back to the core of the issue for the consumer or the household owner. I think another practicality topic I wanted to touch on is what happens when the insurance claim is paid. Because when we talk about that Lismore example, I was reading up on some of the inflexibility of these insurance companies paying out for rebuilds that had to be like for like. Like for like's not cutting it anymore. We've seen 2022, we've seen 2025. If your property was affected in both instances and then you're given money to just rebuild it the same as it was, what's the likelihood of that turning into an acceptable premium for you to pay in the future?
Let's try and back to that anatomy of a catastrophe.
Yeah.
What happens after? So assuming that a policyholder submits a claim, the claim for indemnity is accepted, what is the end result? In those policies where the cover is for, as you call it, for like, replacement coverage, if the subject matter was a weatherboard timber house out in rural New South Wales that a bushfire went through and turned to ash, being reinstated by way of replacing your weatherboard timber house with another isn't going to be much comfort.
No.
That's where part of these government-led initiatives, and to be fair, supported strongly by the Insurance Council of Australia, have included studies into and measures to try and introduce greater resilience in building methods and materials so that reconstruction events involve those practices to try and then minimise the impacts of future natural disasters on the same locations.
But it's really asking us to change the way we've done things, isn't it?
Absolutely. We don't have a choice.
Yeah.
Unless a particular consumer is so well heeled they can continue to wear the increase in premiums no matter what, something else has got to change. And there are only a limited number of levers to be pulled or pushed, as it were.
And I think wearing the trauma of going through that again would just be such a significant consideration that you'd have to think through as well.
Which leads many people, of course, in those areas to pack up and leave.
Yeah.
And come to the cities, which has its own attendant downsides, and including the example from the LA wildfires, you're still not completely safe.
No. So can we talk about what's in the works at the moment in Australia to review, plan, predict how we can see through this problem?
Yes. Well, there are a number of, I'm going to say, attempts at trying to ameliorate this problem, or at least try to manage it. I don't think there's any, and I'm sure there's no instant cure. Climate change itself, no matter what measures are being put in place to move us away from fossil fuels, for example, will not have immediate results.
No.
That are permanent. In the meantime, these various natural disasters are creating immediate problems for huge swathes of the population. And there are knock-on effects too. There are instances where, for example, intergenerational wealth is at risk in medium-income homes where the vast percentage of their overall assets, their worth, is in their family home, which is normally underinsured or in some respects uninsured. The loss of that has a knock-on effect, not just for that particular family, their kids, etc.
It's scary, isn't it? I was reading one statistic that said for many people, in the event that their home, which is their primary asset, is destroyed and they are uninsured or underinsured, it's sitting at around 75% of their net worth gone.
Correct. Now, if that's wiped out without any other form of support, government or otherwise, you are going to see very rapid erosion of the title we've enjoyed for at least half a dozen generations, the lucky country. I don't want to sound too alarmist about it, but it is a realistic projection through to the potential consequences. If people lose those assets that they spend most of their life working for because of under or lack of insurance, what do? They start again? You're starting again. Where's the net wealth? Well, it's going backwards.
Absolutely.
So it is a very important issue, and the government clearly is aware of it. The various relief programs, including things like the Australian Government Disaster Recovery Payment, there's a Disaster Recovery Allowance, there's the Australian Reinsurance Pool, which I've already touched on, have produced some very beneficial results in terms of, for example, the Alfred cyclone and its impacts. About 90% of the claims for that were covered by the Cyclone Reinsurance Pool.
Wow. So it's really working. It is there.
Working. But of course, it's only working as long as it's sufficiently funded. And there's this race between how many more natural disasters we're going to get in a given season, what's going to be their impact, how much is it going to cost to recover, versus how much money is getting pumped into that fund to meet the recovery costs or to support the market insurers through things like cheaper reinsurance. There's also another initiative, if you like, called the Hazards Insurance Partnership, which is managed by the National Emergency Management Authority. It's also responsible for what's called the Strategic Insurance Project. Now, these all sound like very, very helpful names and ideas, and they are in terms of their intent, but it's the execution, the implementation that is taking time and isn't going to please people who've just come out the back of a flood a couple of months ago or the next bushfire necessarily in a hurry. That particular NEMA, NEMA as it's called, managing those particular funds has been fairly helpful. For example, the Disaster Ready Fund has about $1 billion committed over 5 years from the previous, now the renewed government. Since July 23, I think that is. One of its primary objectives is to build resilience and prepare for disasters. So you can see a change of focus, a change of policy perspective. There's only so much that can be done financially within the domestic and global insurance market. There are only, as I said, the word integers before, there's only so many components that can be tweaked, supported, moved around to try and produce relief there. But whilst insurance remains a commercial product, it'll be driven by the usual pressures of demand and supply and the necessary imperative to create a profit.
It feels like climate change versus consumer outcome versus company success.
Correct. So there's an inherent tension between those various considerations and interests. The irrefutable fact, though, is that whatever objects and interests insurers have and whatever needs and interests consumers have, they're being dictated to by the planet.
Exactly. You can't fight Mother Nature.
Yeah, that's right. You can't choose to just not have a flood or a bushfire. It happens to you. Yes, there are some, of course, that are man-made, but invariably the conditions which permit them to occur are part and parcel of climate change.
Well, I think Black Saturday bushfires are an example of that. Yes, there may have been intervention by humans to make it happen, but the situation was sitting there, ready to occur because of the climate change that led to that point.
Yes. That's back to that anatomy of a catastrophe again. You think about it. There were so many calls at that time and with probably just about every other bushfire for fuel reduction measures to be implemented by governments and those who are in charge of managing those reserves and parklands and bush areas. Short answer is, where's the money for it? If there's insufficient money, it doesn't get done. The ingredients for a disaster are there and become very, very ripe. And so there's all this fuel sitting around these places, these locations. And of course, I used the weatherboard house example before. There are plenty of those still in Australia.
Absolutely.
And you've got open-faced machinery sheds and you've got hay stacked all near it. So all of these ingredients come together. So moving away from the focus of insurance is going to fix all that or should fix all that, it's just not going to anymore.
Yeah.
Either because of lack of availability or lack of affordability or both. So the focus is moving towards, well, what can we do to be more resilient to prepare for these disasters and try to reduce their impacts that way? Now, you're asking about other measures that have been put in place in recent times. The most recent was a Senate Select Committee last year appointed to conduct an inquiry on the impacts of climate risk on insurance premiums and availability.
I was quite comforted to see this occur. There was one quote in the foreword to this that I really liked, and I thought I might just read it because I think it does set the scene for what's to happen next. It said, "The committee recognises that these disasters can no longer be seen as one-off, isolated events as they continue to grow in frequency and intensity due to the exacerbating climate risk. At the same time, insurance premiums cannot continue to rise unchecked and out of the reach of a growing number of people. Reform is needed to address both climate-driven disasters and insurance to ensure that the disaster insurance gap does not continue to grow." So if that's in the forward, that sort of paints the picture for what the outlook is. What recommendations came from this?
In short, it produced or made 8 recommendations. The first was to establish and maintain a publicly accessible national disaster risk map, it's a mouthful, in collaboration with all levels of government and the insurance industry. So you can see that's a measure designed to get a better idea about where are the risk areas. Historically, what have been the intensities and frequencies of events in those risk areas. The second recommendation the committee gave was to require insurers to provide policyholders with detailed explanations of premium costs, including how disaster resilience efforts affect pricing. The third recommendation was for the ACCC to monitor and to publish premium prices across Australia. That seems to be indicating that the measures like the Cyclone Reinsurance Pool are having positive effect on keeping downward pressure on premiums. The fourth is to phase out general insurance taxes through intergovernmental cooperation and incentivisation. This has been a very vexed issue when it comes to affordability because different states and territories apply different types of taxes, levies, stamp duty and different amounts on insurance premiums. So you can get quite a wide variance for the same level of cover, value of cover, nature of cover in the premiums from state to state. So one of the objects here is to remove those taxes and other indirect costs. But of course, that's going to require cooperation between the states, territories and the federal government. And ultimately, of course, it boils down to who pays, who's going to make up the shortfall. The fifth was to expand the Cyclone Reinsurance Pool to include all natural disasters. Now, if that comes to pass, that will bring Australia to a very, very high level of activism in terms of government support with the insurance industry to try and control this growing problem and to return the average household to a place where it can feel comforted, that it can afford and maintain its insurance.
But ultimately that's in the background and requiring insurance companies to have that reinsurance discussion.
That's right, and also requires the federal government to come up with the capital reserves which underwrite or guarantee that reinsurance pool. Now, where's that money going to come from? You can see we go full circle back to, well, is it eventually going to come out of taxpayer dollars? The sixth recommendation was to increase federal investment in resilience measures. And the seventh was to review land use and planning policies to reduce future exposure to high-risk areas. Those two measures combined should produce a situation where either traditionally prone communities will change in terms of their geography or their physical makeup. So, for example, how they build houses, how they build their shops and centres, how far apart they are, what landscaping looks like, how their natural reserves are managed and grown, etc. The last recommendation was to introduce a levy on coal and gas extraction companies to fund disaster mitigation and offset rising insurance premiums.
Can I say, I was surprised to see this in here. It felt bold to include that, and I'm really pleased to see it, but I think it was one that I think was quite significant for the committee to identify because it seems to be looking at the bigger picture. There's so many layers to this problem, but I think the overarching one is to do with climate change. And I think talking about coal and gas is something that has to happen.
Yes. You can see that's a reflection also of the reigning political parties' policy. Now that we've got a new cycle, it's cause for hope, at least, if not expectation, that these recommendations will be implemented to some extent.
So, Michael, what do you think happens next? If we're at this fork in the road where the natural disasters aren't stopping, premiums are going up, we've got some degree of surety or confidence around the reinsurance scheme, what's the next step?
Well, the next step, in my view, is at the feet of the insurers. The traditional panacea for this type of risk has been insurance. It's going to remain in the psyche of most Australians for as long as it's available and they can afford it. But those two propositions are on the wane. That's only because of in a response to insurers' behaviours in the market. So the tensions are emphasised. The insurers want to keep doing business, but they can only do it if it's commercially viable. Consumers need the cover, the protection, the peace of mind, but only if they can afford it and it gives them what they want or need. That tension is likely to result, I think, in the short to medium term, that is over the next sort of 5 to 10 years, in more and more people not being able to afford full coverage or at all. There doesn't seem to be any present indication that the cost of living pressures generally are going to be alleviated anytime soon. And when one looks at the largest slice of most households' income pie or expense pie being mortgages, they're not coming down anytime soon. So insurance is a tack on, if you like, to the cost of having a roof over your head is just adding to those woes. Now, what's going to happen then? Well, people are left with either effectively self-insuring, meaning putting aside some money for a rainy day, but we all know that that's more of a aspirational than real.
Yeah.
Or they're going to have to put more into protecting themselves physically. As I keep coming back to better building materials, better building methods to try and minimise the damage that's done if you are exposed to any of these. A good example that I can sort of hark back to from growing up in North Queensland, most of the houses at that time were built on stilts.
Yeah, the classic Queenslander.
Either the wooden power poles cut in half or concrete posts, something like that, but they're up off the ground. So you can say, for example, well, improved building technology will certainly help for bushfire scenarios, but what about flooding?
Yeah.
Short of living on boats or barges, that might be an area for building regulations in those relevant prone areas. But they're the sorts of measures that I think people will have to actually undertake themselves rather than relying on A, insurance, B, the government, entirely at least, to look after them. The combination, of course, is the only sensible and fruitful way forward. It's just a question of whether the current government will maintain the impetus and the consciousness of helping. I believe that they will. All of these various initiatives, the millions and millions that have been pumped into studies, committees, recommendations, you'd expect to see some fruit sooner rather than later.
We absolutely don't want to see the example like we had in LA where major insurers are just up and leaving the market and saying, risk's too high, we're a business, we're about profit, we're out.
Exactly. So that's where the Cyclone Reinsurance Pool is a perfect tool to at least try and avoid that.
Michael, there's so much in this and I thank you so much for joining me to talk about these really important issues to do with insurance. Thank you so much for joining me for a brief chat.
Pleasure.